December quarter results of Ambuja Cements were consistent with industry trends. Subdued market conditions impacted revenue and the margins were under pressure due to inflationary headwinds. Ambuja reported a revenue of 3,735 crores in Q4 of calendar year 21. Volumes for the quarter stood at 7.2 million tons, implying a 2% growth YOY. Its volumes were moderately ahead of industry peers, as majority of large cap peers reported a decline in the range of 2 to 4%. Healthy pricing environment in its key operating markets along with rising share of premium products contributed to the uptake in realizations. However, the broad-based increase in input costs drove margin compression. Variable costs shot up significantly owing to a steep escalation in power and fuel expenses. Meanwhile, increased brand and promotion exercises as well as shutdown and maintenance expenses dragged the margin profile. Operating efficiencies helped Ambuja mitigate some of the margin headwinds. Despite elevated crude prices, freight expenses declined 5% year-on-year with changes in railroad mix and network optimization. In 2021, Ambuja Cements commenced the commercial production of clinker and cement at its Marwar greenfield plant in Rajasthan. Built with an investment of 2,350 crores, the new plant has a clinker and cement capacity of 3 MT and 5 MT respectively. Meanwhile, the company has already started greenfield expansion of 1.5 MT at existing grinding unit at Ropar in Punjab. The timeline for the completion of this project is 12 to 18 months. The company, meanwhile, is also evaluating debottlenecking initiatives across its various plants. Ambuja has an existing capacity of 31.5 MTPA, of which 20% is located in the eastern region. Recently, the company announced big ticket investment of 3,500 crores to facilitate 7 MTPA capacity expansion in the eastern region. It's important to note that East remains the fastest growing market within India and the region has garnered a lot of interest from large and mid-sized cement players. Nuvoco Vistas, Ultratech and Dalmia Bharat are eyeing a combined capacity expansion of 20 MT in eastern markets over the next 3-4 years. The company, meanwhile, is undertaking a number of initiatives to drive cost savings. Ambuja has already achieved cost savings of 280 to 300 rupees per ton through various strategic projects undertaken in the last 2 years. Additionally, it is setting up waste heat recovery systems, railway siding units and fly ash dryers at its plants to generate operating efficiencies. The share of renewable energy in the total power mix currently stands at 4 to 5% and the company aims to reach 25 to 30% in the next 5 years. Elevated energy costs continue to pose a threat to Ambuja's near-term margin profile. Concerns around the profitability and the margins have triggered a 20% correction in Ambuja's stock in the last few months. Long-term investors therefore should make use of the current volatility to build positions in the stock, as Ambuja, with CY22 estimated EV to EBITDA multiple of 12.5x, is one of the largest cement manufacturers in the country with very strong business fundamentals. The cash-rich balance sheet and improving cost structure offer additional comfort in the current market environment.